Well, let's get across the market open now. Isaiah El Shabini joining us from Macro. Good to catch up with you on this Thursday morning. Looks as though we're going to have a positive start locally. We had strength also in the US market overnight. What are you seeing at the moment?
Yeah, absolutely. Well, thank you for having me, Andrew. And as you just mentioned, we do look like we're going to have a very strong open this morning, up about 0.75%. And that's off the back of the S&P also gaining quite well, where we had a lot of the financial sector reporting really well overnight. So driving gains up for the S&P as a whole. So we are now looking to break the all-time high again, which was just set actually earlier this week on Tuesday. Yesterday, the market did retreat locally just ever so slightly. Today, we look like we are going to be taking that all-time high back, and we are going to have some interesting news come out today. So we have the unemployment report, which will be coming out at 11:30 a.m. Eastern Standard Time. So this could potentially be the last time where we could talk about a potential rate cut for the end of this year for Australia. The numbers will probably need to be quite soft for that to be the case. As we stand, the markets are currently pricing in about a 10% chance for a rate cut in November. So the unemployment rate is expected to come in at 4.2%. Analysts at Commonwealth Bank are expecting 0.1% higher at 4.3%. And then we are also expecting that around 15,000 jobs will be added to the market. So that's the Commonwealth Bank estimate, which is actually lower than the expectation. So it'll be interesting to see the figures coming out around 11:30 and how the market is going to respond to that. But it's clear to see that we have a very different interest rate environment here in Australia as opposed to the US. So as just mentioned, the markets are only pricing in about a 10% chance of a rate cut to the end of this year. And there's only the market's pricing in 3 rate cuts by November next year for Australia. Now, when we look to the US, they have 6 cuts expected by September next year, 2 of which we already received from the 50 basis point cut that occurred a few weeks ago. So very different interest rate environment in the US as opposed to Australia. And based on this, here at Macro, we're actually looking to gain further global exposure. And we've started recently allocating into some LICs to potentially take advantage of the lower interest rates environment elsewhere, while still maintaining a very strong foothold in the Australian market.
So equity-wise, Isaiah, how are you comparing what we're seeing in the US at the moment? Obviously now we're in the midst of third quarter earnings season at the same time, where we're seeing some positive results there, compared with the local market on the ASX. But on both sides, we're seeing record highs.
Correct. Yes, we are seeing record highs on both sides. Financials are doing quite well in both the US market as well as the Australian market. We are now seeing a little bit of rotation in the US into the small cap space and just other areas where the interest rate environment would be more inducive for growth. If we have a look at the chart there, that's the XJO as of yesterday's close. So we see on Tuesday, we did set that all-time high. There's a few different scenarios as to how I see the markets could potentially play out. Obviously, scenario 1 there, you see that we are going to, that was the expectation to make an all-time high again, which as of market open in an hour or so, it looks like that is the most likely scenario, and that's what will occur. However, potentially between now and the election coming early in November, I do believe that we may start to see somewhat of a pullback on the ASX and the US market as well. And I've highlighted 2 or 3 where I believe the price could come back to. Now, speaking technically, whenever we do have a breakout like this, there's something called the pendulum effect. Whenever we set these all-time highs, we generally do tend to have somewhat of a pullback. Ideally, markets tend to pull back around 50% of the way, and that's when a lot of traders or technical analysts use Fibonacci levels of either the 50%, the 68.2 or the 38.2. Now, the actual prices we could potentially see markets pulling back to, the first level there would be 8,220 points. That would indicate about a 1% loss from the actual close of yesterday. The more likely scenario, we might have a deeper pullback after this next little bull run, and that could be a pullback down to 8,132, which is scenario 2 that you see in the chart there in front of you. And we do have scenario 3, but Andrew, I hope that we don't actually have to get there, and that would be a pullback below 8,000, which would see the next area of support at $7,929.
All right.
Units.
Yep, going to be fascinating to see which scenario plays out then, Isaiah. Now let's get a little more on the micro in terms of, look, we've got some results out today, particularly from the miners, and BHP is the headline today. What are you seeing there on the chart? Because just in terms of the headline for BHP, certainly it's come up with it's started the new financial year positively just in terms of its iron ore shipments.
Yeah, absolutely. So as you can see on the chart there, we set the all-time high in December last year, and then we did have this bearish descending channel where you can see through that first rectangle, price coming back down to that middle area of support. We were able to hold at that area of support for some time and entice some new market participants. However, as you see, then we had the next journey down to a much larger area of support and a very strong demand zone. Now, I was fortunate enough to get some of my clients in to average down their positions at around that $37 mark, where you can see a long entry there. So we do have a very strong area of support. I'll just bring up the exact price here at around $37.25 or around that region. Since then, we've now had something called a weekly break in market structure, where markets have now shifted from being sell side liquidity to buy side, where you can see a very strong bullish engulfing candlestick shooting through the stars. We now have something on the chart there, which I call premium and discount, and essentially very similar to how a 50% Fibonacci retracement might look. In this instance here, what I really like about how it's sort of unfolded is that the 50% retracement level aligns with a very strong area of support at around $42.50. So given the market's opening bullish today, I don't think we're going to reach that price today. We do see probably that there's a higher probability that price will continue to climb, but it may test this level of $42.50 before then hoping to attack the highs again at around $50.20.